Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I hope that you guys have a great and restful weekend, and welcome to a brand new trading week. Very good morning. Today will be the Monday, the 18th of August 2025. So, as usual, before we kickstart our gist of the Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, before we kickstart the gist of the daily dose, which is the technical outlook for the various broad-based cross-asset classes, let's have a quick look at what has happened, what has taken shape on last Friday and today's early Asia session in terms of economic news flow and as well as key economic data releases. So on Friday, there's a couple of interesting data I want to share with you guys, starting from Asia over here. So while I was away on Friday over at Asia, there's this key Chinese data that has a release on Friday where industrial production actually went down below expectation, as well as retail sales as well. So industrial production slipped to 5.7% year on year for the month of July, from 6.8% year on year in the month of June, and also slightly below expectation of 5.9%. Retail sales also tumbled as well to 3.7%. That means it grew at a slower rate compared to previous month of June at 4.8%, and as well as way below expectation of 4.6%. So indicating there's some kind of consumer confidence deterioration in China, and as well as some form of slowdown in manufacturing growth. So that actually causes a negative feedback loop on the Hang Seng index, which is the Hang Seng Hong Kong 33 CFD index that broke below our tightened short-term pivotal support on last Thursday. So later I'll touch on more about that in my second segment. And also over to US as well, retail sales also came down below expectation. So a retail sale year on year also tumbled down to 3.9% in terms of slowdown in growth from 4.4% that was previously printed in the month of June over here. So one more leading economic indicator, which is much more important in terms of the growth of the US economy, will be consumer sentiment flash data for the month of August compiled by University of Michigan. So that also came down below expectation and also below the previous July print of 61.7. So it came down at 58.6. Below expectation of 62. So it actually slipped down to, I believe it's 3-month low or something like that. So let's take a look at the trend over here. All right, so it slipped down to 5-year trend. All right, so it continues to inch down and print lower highs. So August preliminary print of 58.6 on the University of Michigan consumer sentiment flash data is actually down for the first time in the 4 months. All right, over here. So it was down for the first time for the 4 months. In 4 months over here. So what's interesting over here is as well as the because in this Michigan consumer sentiment, there's a subcomponent called inflation expectation. So 5-year inflation expectation flash data also inch up higher to 3.9% from 3.4% that was printed in previously July. So that also inch up fears of what I call inflation. We call it fears due to tariffs uncertainty. So the 5-year inflation expectation in the state increased to 3.9% in August from 3.5% in July. So that is actually kind of a higher than the previous month of 3.4%, but slightly below June print of 4%. So if you look at the 10-year trend, it also starts to inch back up higher. That there's actually a series of higher high and higher lower, indicating that the broad-based major trend of this 5-year inflation expectation compiled by University of Michigan still remains intact. All right, and if you look at the 1-year ahead inflation expectation as well over here, okay, which is this print. Okay, it also inches up from 4.9% in August, from inches up to 4.9% in August, from 4.5% in July. So this is a more shorter term 1 year ahead inflation expectation. So there's an inch up in this inflation expectation data from the 1 year ahead as well. So what we could see over here is that shorter term inflation expectation and longer term inflation expectation, that is the 5-year look ahead, slowly is increasing upwards for the month of August. So indicating there's a bit of stagflation fears in the US because of a slowdown in consumer sentiment, but an increase in inflationary expectation as compiled by the latest University of Michigan flash data for the month of August. But despite these stagflationary fears, over here, the US Federal Reserve expectation for their interest rate policy that is going to be held on the 17th of September continues to point for a high probability of a 25 basis point cut on the next meeting, which is 17th of September 2025. So that is being compiled by the CME Fed Watch 2, as you look at my screen over here, taken from the latest data based on the trading behaviors of Fed funds futures traders over here. So yes, there's a slight downtick from a day ago, which is 85.4%, and after the release of the lackluster University of Consumer Sentiment data, but also showing fears of inflationary uptick, that decreased slightly only to 82.8%. So indicating still a high chance that the US Federal Reserve may cut interest rate by 25 basis point to 4.5% to 4% to 4.25% to 4% in the next upcoming meeting on 17th of September. Then how about the look ahead for the various meetings? So for the various meeting, market expectation is also another high chance that the second cut will come in on the last meeting of the year, which is on the 10th of December 2025, to bring the Fed funds rate to 4% to 3.75%. So that's a 84% chance, which is rather high over here. So net overall, market is still looking for a potential 2 interest rate cut before 2025 ends by the Fed. So with these 2 interest rate cut, that actually kept dollar strength from resurfacing on last Friday. So if you look at the US dollar 5-day rolling performance as of other major currency, as we are speaking right now, the dollar is actually kind of trading still flattish over here. After that slight uptick on Thursday. Then from Thursday onwards until the entire Friday is just trading on a very sideways configuration. All right. So for the major US stock indices, what we could see is that there's a profit taking on Friday. The S&P is down by negative 0.29%. The Nasdaq 100 is down by 0.51%. Interestingly, the Dow Jones Industrial Average closed up almost flat at 0.08%, whilst the Russell 2000 is also down by negative 0.55%. So it's more of a profit-taking day on the major US stock indices, but most of them still managed to held up above our short-term pivotal supports level. All right. So now another news I want to share with you guys over here is Trump and Putin managed to meet up on Friday over here. So there's nothing pretty much concrete talking about a ceasefire deal between this ongoing 3-year plus of Russia-Ukraine war that is still ongoing. But however, there's some positive signs stating that it's now up to Zelensky to make a deal after summit meet with Putin. So, and also why this potential positive sign is over here after Trump's meeting with Putin over here, Trump actually mentioned that he decided to hold off China tariffs over Russia oil purchases over here. So previously Trump threatened that China, together with India and any other countries that continue to purchase Russia oil, Trump will actually invoke higher tariffs on this country. But right after the meeting with Putin, Trump actually mentioned to media that he decided to hold off such, we call it hikes over here. So indicating some form of potential deal that is likely to have already kind of in the making between US and Russia. All right, so that actually saw oil prices decline as well. Why? Because we know that oil prices is pretty much sensitive to Russia supply as well. So if there is some form of deal that is being done, Russia oil supply could actually flow to the global market much more, and that actually saw oil prices declining right now as we are speaking in the Asia session. All right, so if you go down very quickly to the oil price, right, WTI crude oil price. So that's the West Texas crude oil CFD price that is quoted in our platform. So now they are actually down by negative 0.64% as we are speaking. All right, so now onwards now to the second segment of the daily dose, which is the intraday technical outlook segment. But before that, let me expand my screen so that you guys can have a better view of the charts over here. So now over at my screen, what you could see over here is my chart on the FX market first. So let us kickstart with the FX market, starting with the euro dollar. So the euro dollar managed to find support right exactly at our pivotal support that we highlighted on last Thursday at 1.1630 before rallying, and it traded sideways in the entire US session, and it can't break above last Wednesday minor high at 11730. So with that, I'll be still using maintaining a bullish bias in any form of a minor pullback. First minor pullback support level will be 11680, 11660, using 11630 as my short-term pivotal support level, maintain that bullish bias. After 1730, the next intermediate resistance level to watch will be 11770 slash 11790. However, a bearish breakdown below 11630 will invalidate the bullish bias, which is very important because that will constitute the confluence with the 20 and the 50-day moving average to expose the next near-term support level at 115.90, which is the minor swing low of 11th of August. Next up will be the sterling pound over here. So the sterling pound also continues to trade above the 50-day moving average since last Thursday minor high of 135.90, 136.10. So throughout the entire Friday session, it just traded sideways, holding above our first support at 135 to 135.20. So no change in terms of levels, still maintain that bullish bias using that 134.95 as my short-term pivotal support level. First resistance to watch for today will be 135.90, 136.10. Above it, seek out the next intermediate resistance at 136.50, 136.80. Only a bearish breakdown below 134.95 today will invalidate today's bullish bias on the sterling dollar to expose the next near-term support level at 134 figure, 133.80, which confluence with the rising 20-day moving average as well. Next up will be the sterling dollar over here. So the sterling dollar had a very nasty whipsaw on last Friday and broke down below our Titan pivotal support at around the 65.15 level, which is the 20-day moving average, and right now it's trading below again the 50 and the 20-day moving average. But what's interesting over here is that on last Friday it managed to survive and bounce at the previous short-term pivotal support on 64.80 that we have before RBA meeting yesterday. So what we could see over here is a neutral mixed elements on Aussie dollar, given that the lack of upside momentum is now beginning to trade below the 50 and the 20 moving average, but held above 64.80. So for today, we will be flipping to a neutrality stance, neutral between 65.40 and 64.80. Only a breakout above 65.40 will trigger off a bullish bias again on the Aussie dollar, taking up the next intermediate resistance to watch will be at 65.80 in the first step. Onward next will be the dollar yen over here. So the dollar yen reacted nicely at our 147.85 short-term pivotal support on Friday, banking off it before trading downwards and now attempting to shape a bounce back again. So no change in terms of levels. 147.85 short-term pivotal support on the dollar yen, maintaining that bearish bias within this medium-term ascending range configuration that is still evolving since the low of 22nd of April 2025. So first support level to watch for today will be a slightly higher level that confluence with a last Friday minor swing low, and as well as the 50-day moving average acting as a support zone at 14670 slash 14640. Only a breakdown below 14640 will invoke a deeper corrective slide to expose the next near-term support level at 145.85. However, a bullish breakout above 147.85 will negate today's bearish bias tone to see a squeeze up towards 148.75 and even the key 200-day moving average acting as the next intermediate resistance at 149.50. All right. Next up will be the technical analysis, intraday technical analysis on the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 plunges down below our Titan short-term pivotal support zone that we have on last Friday, but managed to help above this rising 20-day moving average, which is at 20,055. And what's interesting over here is that after bouncing off slightly from the 20-day moving average at around this 20,055 level, the hourly RSI also managed to slope upwards as well over here. Right, the hourly RSI managed to slope upwards and now is intending to actually hit back the 50-day moving average. All right, sloping upwards, forming a higher high, higher low after hitting the oversold region. So indicating that some form of bullish momentum in the short term is creeping back into the Hong Kong 33. So with that, I will still maintain that bullish bias for today, despite last Friday's sell-off, because of this positive element that I shared with you guys earlier. So with a short-term pivotal support level to watch out for today will be 20,055. All right, short-term pivotal support, 20,055 over here. So first resistance level to watch will be the breakdown level that took shape on last Friday, which is this 25,545 level. Okay, let me put it in writing. Let me do some adjustment. All right, so having a bullish bias for today using 20,055 as my short-term pivotal support. First resistance level to watch on the Hong Kong 33 for today will be 25,545. However, a breakdown below 25,055 will invalidate today's intraday bullish bias recovery view to expose the next near-term support level at 24,915. Failure to hold above 24,915 may revisit the minor swing low where the previous steep rally take shape, which is on the 12th of August. Okay, so that will be 24,730. 4,730. All right, so that's for the Hong Kong 33. Next up will be the Japan 225 representing the Nikkei 225. So the Japan 225 and Nikkei 225 continues to exhibit a very strong bullish momentum over here. So what we could see over here is it continues to stage a very strong rally, clearing above our first resistance level at 43,560, now heading towards 44,050, 44,110. RSI now is already hit the overbought level over here, but there is no clear signs of a bearish divergence yet over here, going to shape higher high. So what we could do over here is that I would actually have a bullish bias on the Japan 225, but let me adjust my pivotal support level from 42,513 to a slightly higher level for today. All right, so I'll be using this level here. Okay, so this former congestion level. Okay, so this will be my Titan short-term pivotal support level. And if we do the Fibo retracement of this steep impulsive up move from 1st of August all the way up to today's intraday high, that's also very close to the 23% Fibo retracement as well. Okay, so this level will be 43,050. Okay, 43,000. Okay, let me do some extension so that you put it in a better clearer view. 43,050. Okay, so now there could be a chance of a minor pullback taking shape. So minor pullback first support level to watch will be this breakout area here. Okay, that was previously minor swing high of 13th of August and last Friday, where in today's Asia session it staged a bullish breakout, now turns into a short-term pullback support level to watch, given that the RSI hit the overbought level. So pullback level 43,460, as long as didn't shape a pullback that break below 43,050, that is my pivotal support level. I will still tighten short-term pivotal support level for today. I will still maintain that bullish bias on the Japan 225. First resistance level to watch will be a Fibo extension cluster level at 44,050 slash 44,110. Above this level over here may potentially take us up higher. Okay, towards the next Fibo extension level, taken from the low of 1st of August from 44,840 over here. Let me put it in writing. 44,840. Level as well. And if you do the minor ascending channel from the low of this start of this impulsive up move sequence all the way up to the current level. Okay, so that also constitute the close to the upper boundary of this minor ascending channel as well. However, a bearish breakdown below 43,050 that would invalidate today's intraday bullish bias on the Nikkei 225 for it to slide down further towards the next support level, which is 42,513, 42,460, and even 41,975 next over here. All right, so that's for the Nikkei 225 or the Japan 225. Next up will be the Germany 30. So the Germany 30 also hit our first resistance level at second resistance level at 24,560 before pulling back over here. And the hourly RSI continues to shape a series of higher high and managed to held up above this parallel ascending trendline support as well. All right, indicating that bullish momentum still remains intact in the shorter term for the Germany 30. So with that, I will adjust my short-term pivotal support for today, breaking up slightly higher towards this 20-day moving average at 24,155. Okay, so this will be my Titan short-term pivotal support, 24,155. Okay, 24,155 will be my Titan short-term pivotal support level. And this will be my next support level. All right. Okay. Okay. Overall, maintain that bullish bias on the Germany 30 in any form of a minor pullback, as long as this minor pullback didn't surpass below Titan short-term pivotal support at 24,155, which is the 20-day moving average as well. Maintain that bullish bias. Next resistance level to watch, 24,560, followed by 24,730. However, a bearish breakdown below 24,155 will negate the bullish tone to seek out a retest on the 50-day moving average, which is the minor swing low of 12th of August at 23,990. All right, so now let's move on to the major US stock indices, starting with the Dow Jones Industrial Average. So the Dow Jones Industrial Average managed to scale fresh all-time high on last Friday, over here breaking above 45,100 previously, and now stage a minor pullback over here. And also very interestingly, the hourly RSI managed to hold above this parallel ascending trendline support taken from the low of 8th of August, all right, bouncing off from it, indicating that the bullish impulsive short-term minor trend still remains intact. So with that, I will use a Titan short-term pivotal support level for today at 44,715. Over here, still maintain that bullish bias. First resistance level to watch will be the previous all-time high at 45,100, followed by the next resistance at 45,455, 45,520, which is a Fibo extension cluster level. Only a bearish breakdown below 44,715 will negate the bullish tone to seek out a deeper corrective decline to retest 44,470, 44,420, which is the rising 20-day moving average. Next up will be the S&P 500. So the S&P 500 also managed to hit a fresh all-time high on last Friday intraday before pulling back, and this pullback managed to form some support level on the minor ascending support channel lower limit taken from the low of 1st of August. So with that, I will have a slightly tightened short-term pivotal support at 6,440 for today. Maintain that bullish bias on the SPX 500. First resistance level to watch will be last Friday intraday high 6,490, followed by 6,517, which is a Fibo extension level. Break down below 6,440, invalidate today's intraday or negate today's intraday bullish bias to see a further slide towards 6,405 next. Nasdaq 100 also maintain that bullish short-term minor uptrend phase, managed to help right above our short-term ascending channel support taken from the low of 1st of August, and also managed to stage that pullback and hit our first support level that we have mentioned on Friday. So no change in terms of levels. Pivotal support still remains at 23,560. First resistance level to watch 24,020. A breakout above it exposes the next resistance intermediate zone at 24,185, 24,240, which is the intersection between the major ascending channel taken from the low of 1st of May 2025, which is this darker turquoise green line, and also the intersection of the upper limit of this minor ascending channel from the low of 1st of August. However, a bearish breakdown below 23,560 will invalidate today's intraday bullish bias to see a further slide towards the next support level at 23,295. Right, next up will be the commodities market over here. So the commodities market, starting with the gold XAU/USD. So gold XAU/USD continues to trade in a rather whipsaw choppy fashion. So in today's Asia session, there is a slight whipsaw below our short-term pivotal support at 3,334. Right, there's a slight dip below it before managed to recover. So given this rather choppy fashion on gold, I will have a neutrality stance on the intraday basis, neutral between 3,359 and 3,324, which is today's Asia session intraday low. Only a bullish breakout above 3,359 will reinstate at least a short-term intraday bullish push-up towards the upper limit of this medium-term sideways range configuration, offering the first intermediate resistance to come in at 3,383, followed by 3,402 that the price action has kept previous boost since 8th of August. Okay, so that's for gold XAU/USD. So lastly will be West Texas crude oil over here. So the West Texas crude oil, put out the RSI, continues to actually inch lower as expected over here. So still no change, managed to have the bearish reaction of our pivotal resistance that we have on last Thursday at 63.85. So 63.85 still will be my pivotal resistance to watch to maintain my intraday bearish bias on West Texas oil. First support level to watch 62.50 that managed to survive on today's Asia session. A breakdown below 62.50 exposes 61.30 next, followed by 60.60, which is the congestion area, the former gap up support of 30th of May, and the minor swing low area of 16th of May to 30th of May this year. Only an hourly close and a bullish breakout above 63.85 will invalidate today's intraday bearish bias to see a squeeze up towards 64.85, followed by 65.60. All right, so that sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar for today. What are the key data to look out for? For today's key data will be rather quiet in today's European session. So the only key data that is up and coming will be on 5 p.m. Singapore time will be Eurozone balance of trade that could influence the euro dollar, the euro crosses, and the Germany 30 DAX. Rather quiet session over at the US session, no Federal Reserve official speaking. So one important event to look out for today will be the meetup after ex-post Trump-Putin meetup on last Friday, where Trump will meet Ukraine President Zelensky, and that will be joined by other key European leaders as well. So that could potentially impact some of the European stock indices, and especially the euro crosses, and as well as the West Texas crude oil. So with that, sum up today's Daily Dose of Market Insight. I'm Kelvin here, signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.